Good morning, Andy. Good morning, everybody. Um, I'm a couple minutes early, so we'll give it a second. Hope everyone's doing well today. Hey, Erla, good to see you. Ron, nice to have you. What kind of car was that? Is that an old Triumph? It looks like an old Triumph. I wasn't sure. There's a lot of cool cars in that parking lot. It's funny the things that we talk about before class. One of the things I love about this room, guys, it's very relaxed. We all have similar goals, and we're all looking to do the same thing. But it very much is a community. I appreciate that about the room. While people come, you have a Mustang rally going on this week. You know, horses scare me, Ron. I'm not really interested in horses. Mustangs are fun. My dad's got a Saline. That's his baby. He's had a couple of them over the years. He's 75, has a 500 horsepower Mustang in the garage. Drives at 12 miles an hour. It's a shame. It's a shame. What is today? Today's Wednesday, September 4th. There was trade balance at 8:30. That was low impact, no big deal. But guys, we've got the JOLTS job openings at 10 a.m. So this is going to be our high impact, which means that the market may bounce. So if you're relatively new with me, you've never heard me say it, checking news every morning, I feel like it's the first advantage that you can give yourself. If you know when somebody may react, when you know when there may be a spike or a bounce or a jump. Yeah, I've heard that too, Andy. I had a friend that did in the late 80s before they all went away, and it was the same thing. Thank goodness now they can have them and upload them instantly. So news isn't a concern to us in regards to what they're saying. Good morning, Zorro. Jolt's job openings really doesn't affect my day one way or the other. But when I see that red box, what it tells me is that there may be somebody waiting in the wings, just excited about the news and saying to themselves, if it's good news, I'm going to buy a bunch. And if it's bad news, I'm going to sell a bunch. And when you know when these releases are, typically most people just say, you know what, I won't trade 3 or 4 minutes before it. And if the market does spike and go crazy, well, then I'll just kind of sit in the wings and wait for it to settle down. And that's my plan each and every time. So I check news each and every morning. And then for those of you that trade crude oil, it is not crude oil inventories today. Anytime Monday is a holiday, they move it over to Thursday. So that will be tomorrow. Then all the stuff I talk about every day, broken record, straight from the Nexgen website. Zero secrets. I do everything in my power to give you anything and everything that you need. And you will get it. By the end of this classroom, you'll have everything that you need to be successful with the software. But from the Nexgen page, there's really 2 tabs I want you guys to know about. The first one is the software guide. If you have any questions about NinjaTrader, if you need to know how to get NinjaTrader to run the best on your computer, if you need to set up stops, targets, if you need to learn how to use the screen capture programs, how to post it in the classroom, how to open and close workspaces, applying templates, building charts. Guys, everything is right here for you. So if we're in class, just ask in class. I'm okay with that. And what I'll do is I'll find you the link to the page that has it, but I'll also give you the answer in class. But sometimes you have Ninja problems after class. This is where you're going to come. This is where you're going to check it out. And then the other one is the trading guide. Every answer you need regarding what we talk about in this classroom comes from here. There's nothing that I really just make up. It's all Nexgen. Someone was talking yesterday how I sound like my brother. And someone else mentioned that my brother sounds like me, not in our voices, but rather what we say. And the message is consistent, guys. And it's consistent because it's not complicated. And that's always the goal in this classroom, is to keep it as basic, as simple as we possibly can. So for the first hour of every day, we talk about, I'm going to the glossary of common terms here, we talk about a high probability trade. Specifically a high probability trend trade. And guys, this is a trade that typically wins 70 to 80% of the time. That's why I teach it first. This is a trade that's going to help develop confidence because of that level of success. But the most important thing about this trade, guys, it's going to teach you to read your charts. Is you're going to be able to look at your indicators and understand whether or not it's time to take a trade. And then that's where I give you the sad news that 90% of your day is really going to be spent looking at indicators. 90% of your day is going to be doing a whole lot of nothing, guys. There's days where I wake up at 5 in the morning Central. I come to you guys at 8 a.m. Central, and I don't take a trade. And then there's some days where it's absolutely gangbusters. This trade teaches you to be patient a little bit. Once you trust it, it teaches you to be patient. And what you're going to realize is that 90% of the time that you're not in the market, it's okay. Because that 10% of the time, you're going to use some advantages. And every time you enter the market in that 10%, you're entering because you have a statistical advantage. And we trade patterns, guys. The market has a memory. It does the same thing over and over and over. So we're trading a pattern that's been proven. If you go back and take 100 pictures of it, it's likely to win 70 to 80 of those pictures, which means that it's going to lose 20 to 30. That's okay. That's a normal part of trading. But your chart reading, being able to look at your indicators and understand the information that it's giving, guys, this is what's going to set you apart. And you're literally going to look at your chart and you're going to speak out loud to yourself and you're going to scare your pets. And you're going to say, I have momentum and there's nothing in my way. I have a clear path. Let me look for an entry. And guys, that's the high probability trend trade initially. It's 3 rules, and each rule creates an advantage. And a trade isn't your desire to make money. It's not your need to pay mortgage. It's not your wish for a Ferrari. Guys, a trade is nothing more than momentum, a clear path, and an entry area. And this is going to hold true probably through your entire trading career. Momentum and a clear path, the first 2 advantages that we teach. Strong triggers on a large chart gives you momentum. No key areas in the way on the large chart. None of what we call termination conditions in front of you gives you a clear path. These first 2 advantages will take you above and beyond. These first 2 advantages are enough to have a profitable, consistent trading plan that'll take you anywhere you want to go. Rule number 3 is specific to the high probability trend trade, and that's your entry. And your entry area is going to change. As you develop an ability to recognize these advantages, as you begin to recognize patterns, the more time you spend in the market, the more you're going to see. But the focus is that your chart reading, recognizing advantages, is only designed to have you following rules. Your read validates that the rules are true. So we're going to have 3 rules, 3 advantages, only 2 charts. Simplicity. You're going to want to add charts because so-and-so has another chart. And you're going to want to add indicators because so-and-so has indicators. Guys, everybody in this room is in a different spot. Everybody has put a different level of work into their trading plan. Some people study just enormously, taking all the pictures, annotating, participating, creating a plan that suits them. And some people walk in and they just want their plan. You know, they're like, well, I saw so-and-so do this. Give me his rules. I could do it. Well, you can't because you haven't learned how to read your indicators. So let's keep it simple. 2 charts, guys. Large chart, small chart. How easy is that? Large chart, slow. Small chart's fast. Large chart uses 1 bar. Small chart takes a snapshot of that one bar and turns it into 20 to 30. Your large chart on the most current bar will define the direction of the market, the momentum in the market, and the areas that we have to be aware of in the market. 66% of your advantages, momentum and a clear path, come from the large chart. Once these rules are true, once those advantages are in play, the small chart is nothing more than an entry chart. This entry chart is going to refine that broad stroke of a brush that the large chart is. It's going to pinpoint exactly where the market is most likely to continue. This becomes your entry, and that smaller, faster chart is going to allow you to reduce your risk and increase your profit potential. We use these two charts because this is kind of one of the best analogies ever, I think. There's two people in control. Neither of them are you. There's a large crowd and a small crowd, and they work together and against each other. The large crowd works together to create momentum, to establish the trend, to react at these key areas, and the large chart leads the way. The large crowd leads the way. And then the small crowd fights them all the time throughout the day. And the small crowd has very small goals, and they typically fail 70 to 80% of the time. They don't reverse the trend. We're going to pinpoint exactly where the small crowd fails, and that becomes the entry for the highest probability trend trade. So, easy way to get to where you want to be, guys. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. Simulate, practice. If you're not 100% comfortable with what you're doing, that's what simulators for, guys, to get out there and make a lot of mistakes. And there is zero shame in being on simulator. There's zero shame in returning to simulator. Every time I learn something new, every time I focus on a new concept, I go back to simulator because there's no reason to blow out accounts learning something new. And that's one of the beautiful things. So when I practice on simulator, guys, I practice the rules because I'm creating this muscle memory. I want to have a statistical advantage each and every time I enter the market. So I really do. I try to avoid trading the wrong rules. I still do when I'm learning something. But what I do is I take pictures of it and I post it in my brother's room, Skype chat. And I say, hey, here's what I'm working on. Here's my plan. Here's a picture I took. This one didn't work out. Do you see something that I don't? And I rely on the feedback from my brother to help me get to where I want to be. And there's a couple of you in this room that I've sent messages to where I said, hey, I see that you take this kind of trade. This is what I'm working on. Am I missing something? And you guys give me great feedback too. So posting trades in class, guys, post them in the room. Get them out there. Pete posted a trade in the room. It's the first thing there, right? And Pete says, hey, Mark, I'm not going to go through all of it because we'll come back and talk to it. This is where I'm coming from. This is what I saw. This is where, I made a little mistake and I recovered and then I made my money. And I'm up $1,100 at 6 a.m. Pretty cool, right? And I'm like, holy crap, Pete, this is so consistent with everything that you do. And I know that you love this trade, but with that level of strength, this one's going to lose more than it wins. And Pete's like, yeah, I know, but it's in the books and I like it. And this is my trade. And guys, every time you do that, every time you post in the room, and we'll go back to Pete's, that was pretty quick, you open yourself up for a private session. If you don't do well with constructive criticism, you need to work through that. Because every time you post in the room, I'm going to go back to the 3 rules that we're going to learn in this first hour. We're going to see what you did. We're going to see where you did it. We're going to talk about how you did it. And we're going to see if there's just a way to do it better, to make sure that your chart read is accurate, to make sure that your entries are the lowest risk, and that your profit targets make sense. So every time you post in the room, hey, good morning, Morgan, it's a private session. It's a one-on-one with me. And we're going to talk about it. We're going to praise all of the good stuff. We're going to look for a way to correct the things that may be creating problems for you. And then we're going to simplify. We're going to talk about this high probability trend trade. We're going to focus heavily on the high probability trend trade. We're going to break down each rule. We're going to look at them individually. We're going to talk about what it means to you as a trader. And then we're going to piece them together to create this highest probability trend trade. You have to know what looks you're going to commit to. You have to learn the patterns. And you've got to learn them until they're easy, which means Repetition, guys. Repetition, repetition, repetition. That's what creates the recognition. And that's where the second half of your step-by-step path comes in, guys. The spreadsheet that I'm going to give you right now, that I give you every day, that I encourage you guys to fill out. I put a note in the room this morning, guys. Between yesterday morning and right now, I'm 55 pictures deep. 55 pictures as I refine the tail end of this new plan that I'm working on. The first tab of the spreadsheet is a trade journal. That's all it is. Every time you pull the trigger, win, lose, or draw, your picture goes in here. There's a place for you to talk about the advantages, and you'll notice that I put in momentum and clear path because these are the two that I believe in wholeheartedly, and I find that the people that have both tend to win more than they lose. You're going to talk about whether you won or lose. You're going to put your picture with the clear annotations. And then I think that this is the one that pays dividends, is the feedback from class. What did Mark, who has 4 years with the software on me, what did Mark see that I didn't? Was I trading into a termination condition? Was I jumping in a little too soon? Did I get out late? Did the market tell me that something had changed? And guys, you're going to use this spreadsheet not just as busy work, but the goal is that you come back and study it every morning. That you come back and you say, man, what worked? And then, of course, you have to ask yourself what didn't work. And we hate to focus on the things that don't work because everyone believes that loss is failure. And guys, it's not. Loss is opportunity. It's opportunity to avoid the next loss and not give money away when we shouldn't be giving it away. You're going to find a correlation between what works with feeling easy and relaxed. Following rules, guys, especially when you start to trust it, it's effortless to trade. You don't care what happens because you know that your trade wins more than it loses. And what feels forced is when you find yourself breaking rules, when you start taking chances. And these forced or nervous trades, guys, if you find yourself moving stops when there's no reason to move stops, when you start changing targets, when you jump out of a trade before it ever has a chance to mature, guys, you know that you're breaking rules and you're not comfortable yet. And you've got to work through that. Post in the room so that we can talk about it. But this little study every morning, guys, it's going to prepare you for the day. You're going to be focused on the good and you're going to try to avoid the bad. And what you'll find is that when you post in the room, it takes me 5 or 6 pictures to know what your thing is. If you're fearful on entries, if you have a fear of missing out, if you jump ship too soon, guys, I'm going to recognize it and we can fix it, I promise. All I need is you to show me what you're doing. The second tab on the spreadsheet, it's just the high probability trend trade rules in green because it's the individual looks that create the trade. It's the 3 advantages that create that trade. I've added in what it looks like to not have the rules met because I think it's just important to not only know what you're looking for to enter, but also what you're trying to avoid to keep you out of those trades. Favorite looks section is where you're going to build your trading plan. And then the client's trade is just my favorite look section. I've stolen nearly 400 pictures from you guys, put it in the green section. And these are client trades. Don't look at this section trying to be the trade police. Look at this section and identify the advantages that we teach in class every day. And what you'll see is that once you can read your charts, you will create a plan that suits you. There is the high probability trend trade entry sequence for both a long and a short. There's a very simple mechanical basic management plan. Ideas on when to hold for bigger moves, patterns that repeat themselves, termination conditions. Guys, all of this is just given to you in the room. I dropped it right in. And this is what we're going to do. It's filling out that spreadsheet that makes it easy. So unless there's a question, let's get going. This first hour feels like a lecture. I know that, especially if you're a brand new user. It's a lot of information coming at you. I realize that as well. My goal each and every day is to take an approach at trading that is very basic, that is simple, that is easy to relay to you, and that doesn't give you too many working parts. So we're going to break it down into these 3 rules, and we're going to start with strong triggers. Strong triggers are my favorite advantage, guys. Strong triggers are enough to just set the tone. And that advantage of momentum comes through strong triggers. So in order to have them, The first thing you have to do is you got to be able to look at the background color. Background color is green, the market's going up. Background color is red, the market's going down. It really is that simple. In order to have strong triggers when the market is going up, both your small triggers, these solid lines, and your large triggers, the dashed lines, they have to be green as well. There has to be the trifecta of green. If one is green and one is red, you don't have strong triggers. If the trigger lines are red but the background is green, you don't have strong triggers. And I think it's important to know the opposite side of things. But what strong triggers is, and that look, is when the small triggers, the solid lines, break above and away from the large triggers, the dashed lines. There's a space that's created between the two. This space between the two is the strong trigger look. And when I have strong triggers, the odds are favorable for the market to continue up. Odds favorable momentum. You'll see it annotated on charts, OFM. In a downtrend, the background is red, the large triggers are red, the small triggers are red. The space between small and large lets me know that the odds are favorable for the market to continue down. Odds favorable momentum, ladies and gentlemen. This is the look that drives a market in the direction of the trend. This is the look that can break those key Fibonacci areas. And this is the look, and this is my favorite part about it, that can cover some of the mistakes that we tend to make as new users. So that strict adherence to rule number one, making sure you have momentum, guys, what a great place to start when you're looking for a trade. But momentum doesn't last forever. You'll notice that the separation begins to close and that the small eventually return back to the large triggers. And when they work their way inside, anything can happen. This is what we call a weakening of the large triggers. Anything can happen up or down. My time at the university, English Lit major, guys, I really do believe that language is important. So I want you to start associating this look with the words odds favorable. And I want you to associate this look with the words anything can happen. And every time you look at a chart, I want you to look at that most current bar and I want you to say to yourself, my smalls are inside of the large, anything can happen. And that's it. That's the end of it. I don't have the advantage of momentum. I'm not going to look for a trade. But look at that strength. It was enough to break areas, right? Look at that strength. It was enough to break areas and carry that market up. But that's only the first part of it. Is everybody cool with that? Especially my new users. Strong triggers can move a market. Strong triggers can break areas. Strong triggers can cover mistakes. Weak triggers is a coin toss. Who knows what's going to happen? We're going to get bigger retracements. Key areas are more likely to hold. Strength versus weakness, guys. That's your first advantage. But once you have momentum, termination conditions, guys. Termination conditions can stop a market. They can make a market bounce. They can be the place where the buyers and sellers fight, sometimes for hours. And termination conditions, when there's none in the way, you're going to have room to your profit targets. And when you have room to your profit targets, we're going to call that the advantage of a clear path. And I just dropped this picture in the room for you. And guys, these are the areas on a large chart. Once again, large chart leads the way. These are the areas that may be termination conditions, that may behave as an area that might stop the market. This is nothing more than a roadmap. This doesn't talk about how these lines are created. That's not important. It doesn't talk about how you would enter or how you would exit at these lines. That's not important. What's important is that you understand that a magenta divergence high line or a cyan divergence low line is a line that can stop the market on the large chart. That Fibonacci resistance, Fibonacci support may stop the market, may create a bounce, may reverse it completely, as well as yellow one-to-one. So we're not learning the whys, just let's define them. And then when price reaches one of these areas, this is where the large crowd makes decisions, guys. These key areas are where the people in control might exit, might enter, might fight. Sometimes they'll fight right at an area. Sometimes they'll fight in between two areas. If you were looking at the ES earlier, I posted this in the room. These key areas are where fights happen. So there's a pretty simple recipe to know whether or not you should be taking that next trade. If price reaches Fibonacci resistance, one of those divergence highs, yellow 1-to-1s, guys, and all you have to do is ask yourself, where are my triggers? If your triggers remain below resistance, no more long trades into resistance. Resistance may stop the market. It might stop the market. It could stop the market. It has the potential to stop the market. It's never guaranteed. But more often than not, it does, which means that the advantage of a clear path is gone. If price trades down to support, where are my triggers? My triggers remain above support. This means no trades into support. I have to wait and see what the reaction of the large crowd is going to be. Is everybody good with that? That's about the most basic run at termination conditions that I could ever possibly give you. Reaches a divergence high, resistance, support, resistance, support, support, resistance, support, resistance. I mean, over and over and over. Scroll back on a large chart. You'll be absolutely floored at how often these areas can stop the market. But here's the deal. Areas break every now and then, guys. And an area is considered broken when both triggers get through the area, which means that price comes down and reaches support, and everyone in this room says to themselves, you know what? The triggers are still above. Let me do nothing and see what happens. Guys, when the small triggers smash through, you can say, man, it's got the potential to break. We're getting close. Look at that momentum. But it's not until the large and the small triggers get below support that we consider support to be broken. And once support is broken, guys, that path is clear. There's nothing in the way until you hit the next line. So no trade, potential for a short, areas broken, let's look for the rules to be met. You'll notice that support behaves as resistance. Price reaches, triggers are below, I'm going to sit on my hands. Small triggers start to smash through with all that momentum. I know strong triggers has the potential to break areas. Maybe there's an opportunity, but it's not until the small and the large get to the other side of resistance that resistance is considered broken, that it behaves as support. Is everybody good with that? It's really pretty simple for the new users. It's either broken or it's not. It's either no trade or let's look for an entry. You guys good with that? Especially you new users. Don't be afraid to throw a Y in the room every now and then. It helps me out. It lets me know that you guys are on. You're good, Paul? You guys voted for a spokesman. I love it. So I want you to see this. Even though this fib is cleared, the triggers are through, right? Price reached the next area. Your clear path is only good until the next line, and there will be times when your path isn't clear because the areas are stacked a bit, because you have maybe a couple fibs, a few fibs and divergence lines. Maybe there's some 1-to-1s in there. And you'll say to yourself, all right, here we go. Man, darn, heck. And guys, this is 90% of your day. 90% of your day is doing nothing. 90% of the day is waiting for the best. And you're going to find yourself bored. 45 minutes, no trade. You're going to try to fabricate something. You're going to start using those dangerous words like it should break, it might break, it could break, it's supposed to break. But if you just wait, let it break, guys, what you're going to find is that your patience is rewarded. And very often the difference between the successful traders and the traders that struggle daily are the people that have a willingness and an ability to do nothing when their rules aren't met. Those are the people that typically find the highest level of success. And the people that try to fabricate a trade, that begin to sacrifice their advantages for the sake of being busy, those are the people that typically struggle a little bit. And rule number 2, guys, it lets you see exactly where the driving forces of the market are likely to make decisions. And very often rule 2 keeps you out of consolidation, keeps you out of chop. 90% of your day waiting for advantages, 10%. You'll be trading based on those advantages. And guys, this was the S&P, I don't know, a week ago maybe, 2 weeks ago, 3 weeks ago. And if I open up my large chart again, this is the S&P, or this is crude oil. And there's the same thing, caught in between areas. Rule number 2, helping to keep you out of consolidation. So is everybody good? Look at that. The triggers didn't break on that divergence low. No reason to take a short and lose money. I love that. Large chart, guys. Large chart says I have momentum. Large chart says that there's no lines in the way. I have the advantage of momentum and I have a clear path. It's time to look for an entry area. If I go to the small chart and I go to find that entry, to define that point where the market is most likely to continue, and I see 3 divergences in the same price range on a small chart, it's a fast chart. It's going to show me change that I can't see on the large chart. If I see 3 divergences in the same price range, guys, that may terminate the trend. It might, it could, it's not guaranteed to, it has no obligation to. But 3 in the same location can terminate the trend. You're going to use the same recipe for broken areas. When the small and the large get past a divergence low or high, you're going to reset and it's out of the picture. These 3 divergences, guys, all it means is that price came down and went up, price came down, it went up, price went down, it went up. Pivots were formed, and at each of those pivots, momentum didn't follow. So it's 3 losses of momentum, and it's important that you associate divergence with a loss of momentum, because as you begin to move outside of the high probability trend trade, that understanding is going to pay dividends for you. So 3 divergences in the same price range may terminate the trend. It is a termination condition. Rule number 2 is not met. It's even more powerful with weak triggers, smalls inside of the large, and it's more powerful still if it creates one of those head and shoulders patterns where your final pivot is higher than the lowest or lower than the highest. And it means that on the small chart you can actually see that not only can the sellers not match their previous prices, but they're losing momentum over and over. And if you are in a trade, this is a great reason to get the hell out of that trade and preserve capital. But once I've got that, once I've got momentum, clear path, there's not 3 divergences, we're going to find an entry area, guys. And the precision is there. The ability to pinpoint where the market is most likely to continue. Or even more importantly, the ability to pinpoint exactly where that small crowd is most likely to fail happens on the small chart, guys. And we're going to be so precise that you'll be able to use a limit order. And you'll wait at an area, fibs, midbands, yellow 1-to-1s, inside of what we call favorable large triggers. So you're going to call your shot with such a degree of precision that you're going to wait for the market to come to you. And if you say rule number 3 in one breath, guys, we're going to use a limit order to buy or sell a pullback, that little fight that the small crowd creates. And we're going to have that limit order at an area, a horizontal line on the small chart, fibs, midbands, yellow 1-to-1s, and that line needs to be inside of triggers. And more specifically for new users, inside of what we call favorable large triggers. This is your best chance of success. Favorable large triggers mean that your large triggers and your synthetic triggers, the smooth large triggers and the stepped large triggers, are one on top of the other. Looks like 2 snakes riding piggyback. When they are, guys, this is the best of the best. This is when you're going to have the least amount of risk. This is when you're going to have the best profit potential, the most accuracy. Because when your large and synthetics are one on top of the other, these trigger lines are where I expect price to return to. But the cool thing is it's not the trigger lines that I think are going to stop the market. It's the areas inside, fibs, midbands, yellow 1-to-1s. So I'm throwing a tennis ball as hard as I can, and I know exactly where the wall is that I expect it to bounce off of. Areas inside of favorable large triggers. You and me both, Andy. And what happens is when these large triggers begin to split, when your synthetic and your large break apart from one another, your accuracy goes away. Your risk goes up. Andy, are you doing everything every day, cleaning out, all that good stuff? Yeah. But it crashes when there's a huge influx of data, huh? That happens. Mine used to. I don't crash much anymore since I upgraded my computer. I'm sorry you're going through that. How many charts do you have open? How many different workspaces are you looking at? That may play a role. If you've got 4 markets open, 4 charts, that's a lot depending on your computer, right? Right on. At the same time or separate? Do you have market flow charts running too? No, you don't? Just 2 each? Okay. Yeah, I'm sorry. I always try to offer something on that, but there's just not much that I have. Computers run in all of the high performance, everything. Guys, that's one of the things from the software guide is make sure, Andy, that you've gone through each and every one of these, that your computer doesn't go to sleep, that you're in the highest power mode, all that good stuff. It's helpful. It really is. All right, guys. Favorable large triggers, overlapping. Look at that. The lines inside, precision. Split triggers. I don't know. Is it going to go here? Is it going to go there? Who knows? I don't know. You don't know. That's the thing is we never know. So why not make it easy? But we got to figure out where's the market most likely to continue, guys. And I want to remind you that your entries happen when you have momentum. When you have a clear path. When these two are met, that's when we're going to turn our attention to the small chart. And guys, your small chart is going to be screaming to the upside if it's an uptrend, if the momentum is up. And this is where the fear of missing out starts to kick in. Right about here, your guts are going to tell you, jump in. It's going without you. Get into that trade. You're not getting paid. And then the reversal bar happens, guys. And the reversal bar signals the beginning of the pullback. The reversal bar is the beginning of that small crowd fight. And the reversal bar is not your entry. That was a mistake that I've seen people make is reversal bar, they jump in. But that's not your entry, guys. And this is why I believe language is important. I want you to write the rules on your chart every time. That we're going to buy a pullback at an area inside of triggers, which means that the reversal bar is only the beginning of the pullback. And then we have to find those favorable large triggers. That's what your red box is here. They should be overlapping one on top of the other. And guys, the trigger lines are not your entry. Hitting those triggers is not an entry. We're looking for lines inside. Fibs, midbands, yellow, 1-to-1s. And we're going to create what I love to call the window of opportunity. The woo for the Ric Flair fans. And your window of opportunity is the point where the market is most likely to continue in the direction of the trend. It's that point where the small crowd is most likely to fail. Sometimes it's a big window, sometimes it's a small window. But it will extend for a long trade from your highest point of support, closest to that reversal bar, to the lowest point of support, furthest from the reversal bar. And then here's the key, guys, inside favorable large triggers. That word inside is huge to your success. Because the second your lines are on the wrong side of those triggers, you don't know if that line's going to stop the market. The likelihood of it stopping the market goes down dramatically. So I want you to get in the habit on day one when you're talking and looking for entries. My entries come from areas inside of favorable large triggers, not beyond favorable large triggers. You don't want to be in a trade down here. Your advantage is gone. So same process, making money the other direction, guys. Large chart says that we're in a downtrend. Large chart says that we have odds favorable momentum in the direction of that downtrend, and large chart says that there are no lines in the way to create a bounce. Let's go to the small chart and look for an entry. We're going to wait for the reversal bar to signal the beginning of the pullback. The reversal bar is not the entry, but rather the signal that it's time to look for those favorable large triggers. Red box represents the point where I expect the price bars to come back to. The line inside of favorable large triggers is where I expect the bounce, guys. Equal opposite reaction. This is where I expect the small crowd to fail. And this is cool. This is like one line inside of triggers. Your limit order is going to go a couple ticks below it, and you're going to hope the small crowd gets there. And guys, each of these lines on the wrong side of the triggers, each of those lines beyond the trigger lines, are not a part of the equation. And this is the part, we saw it yesterday. We saw people taking trades from the wrong side of the triggers and just getting absolutely smoked. Once you're on the wrong side of those triggers, guys, it's not where you want to be, and every line needs to be ignored, because honestly, the other side of the triggers is where your first stop's going to go. We've just spent 40 minutes talking about where the market is most likely to continue, putting our entry just below the lowest point of resistance, just above the highest point of support. Your initial stop is going to be placed where the market shouldn't go. I love that phrase, where the market shouldn't go. It shouldn't go beyond areas inside of favorable large triggers if this trade's going to work. But it will go beyond the areas inside of favorable large triggers 20 to 30% of the time. 2 to 3 out of every 10 trades you take. We don't know which 2 or 3 it's going to be, so our initial stop goes where the market shouldn't go. 4 to 5 ticks on the other side of those trigger lines. 4 to 5 ticks below the trigger lines. And guys, make them come get you. Remember, you have the advantage of momentum, you have a clear path, you have the perfect entry per the rules. Make them come get you, and it's okay. Small losses are a normal part of a positive equity curve. We're going to decrease risk even more if we get what we call a confirmation bar, a reversal bar in the direction of our trend, which means that if this bar goes down, my new stop is 2 ticks above that bar, or my new stop is 2 ticks below that bar. And guys, it's not uncommon to see Nexgen users take the perfect entry, have awesome stop movement, and then the trade doesn't work, because sometimes they don't. And I've seen people lose 3 or 4 ticks. And one of the great things that understanding this initial stop placement does for you is that you can make the decision before you ever enter the trade if you're willing to put that risk on a trade. And there may be times where you say, you know what, I'm just not willing to put that risk on the trade. And it's typically when your highest line is up here and you know your stop has to go down here. You'll be willing to say, you know what, that's just too much. This one doesn't fit my plan. I'm going to hold off, maybe wait for confirmation. So guys, this is the first half of everything that I do. This is the first hour every hour. This is the most basic pattern with the highest probability of winning. This is the one that focuses on momentum, that insists on a clear path. This is the trade that typically wins 70 to 80% of the time. But guys, the best thing about it is it's teaching you to read your indicators. So you need to be able to go back and study this look. The easiest way to get to where you want to be is not taking trades. Everyone thinks, I have to be active, I have to pull the trigger, I have to do this. You don't. Scroll back on your large chart. I'm going to show you how this works. Scroll back on your large chart, and if you see a tail, whether it is the potential to break or whether it's broken, as long as you have odds favorable momentum and the small triggers are through, I want you to circle a tail, guys. This tail is the pullback on a smaller, faster chart. There's one right there. There's one right at the beginning of the odds favorable momentum, and there's one out in the middle. Is everybody with me so far? All I'm doing is identifying momentum and circling a tail, making sure that I at least have the potential. Guys, this is the easiest way to build trust in this methodology. So I'm going to go back and I'm going to minimize that. And then I'm going to pull up my small chart, guys, my fast chart. And I'm going to scroll back and I'm going to look for these tails. So my first tail is right about 8:56 a.m. And that circle is going to show up. And check it out. Not the prettiest, right? It had the potential to break. That first tail, and then I get 3 divergences. And guys, sometimes it won't be a trade. This is one of those times where it's probably not going to be a trade for me, but if you look, it's still pulled right back to support inside of triggers before it headed off. Large triggers were up here, synthetics were down here. It came back to the lines inside of the synthetics. This is why overlapping is just the easiest way. Here it pulls right back to the mid-band, right inside of the large. Didn't even have a circle on that one. If we scroll back here, right to the mid-band inside, just below the mid-band inside. And guys, it's just a pattern. over and over, right to the mid-band inside of favorable large triggers. So scroll back. Every workspace you have, guys, every chart that you have, scroll back, circle these tails. There's another one. Isn't that pretty? Right to the mid-band, right inside of favorable large triggers. How incredible. This is your pattern, guys. This is the one that produces more wins than losers. This is the one that teaches you to recognize momentum, that has you identifying that the path is clear, and it shows you exactly where the market is most likely to fail. And guys, this thing just kept going. And that's my first hour. Are there any questions about the high probability? Whoa, right off the chart, huh? Any questions about momentum, what it looks like? Any questions about termination conditions? I'm trying to find my small chart real quick. Right into mid bands, right inside of favorable large triggers. Right back to the mid band, right resistance, right inside of favorable large triggers. How cool is that? Over and over. First day here, White Dog. Welcome. It's great to have you. Thank you for saying that, because it lets me show one of my favorite pictures. All I have to do is type drink and it brings up drinking from a fire hose. There's day one, right? Guys, day one, it can be a little overwhelming. Day one feels like a lot of information coming at you. I know that it does. I've been part of day one. I've had a day one just like you have. But here's the deal. The easiest way, and I swear this is the easiest way to get to where you want to be, is learn how to break these down individually, guys. Don't worry about a trade for your first couple days. Don't feel like you have to know it all. In the words of my beautiful wife, give yourself a little grace. You're brand new. And you're not obligated to learn this in the first day. But to get to where you want to be, you've got to be able to recognize these looks and patterns. That's all they are. It's just patterns. So I encourage new users, and you guys that are struggling, you know who you are. Take 25 pictures of strong triggers and 25 pictures of weak triggers, and make sure you know the difference so that you always have the advantage of momentum. Take 25 pictures of a clear path. Take 25 pictures of a termination condition. Know the difference so you don't trade into those termination conditions. Take pictures of those high probability trend trade entries, guys. Go back and circle some tails and look for them. But don't just take the picture. The idea is that you talk about why. Why is it strength? And this all goes back to the 101 tab, guys. If I click on a picture that says strong, I want you to see how it was annotated. It says strong triggers, odds favorable momentum. This is rule number one met. That was the worst example because I didn't annotate that one very well. Let's go to strong triggers up. Here we go. Smalls above the large, all green and wide. This is strong triggers, momentum rule number one met. So White Dog, my promise to you is that if you scroll back on a large chart, don't worry about taking a trade, don't worry about making money or anything. And you say, hey, wait a minute, that's that strong trigger look. That's that look that Mark was talking about. Take a picture, draw an arrow, and talk about, draw all the arrows, and talk about this is smalls above the large. Space between. Odds favorable momentum. Strong triggers, right? Really drill at home what it means to you. Rule one met. And I didn't have to take a trade, but now I have the perfect look so I understand momentum. And then watch this. In the same picture, didn't have to take a trade. Look at the recipe here. Price reached resistance. Triggers stayed below. No long trades. No clear path. Rule 2, not met. This is how you guys are going to get to where you want to be. Rule number 2 is the most broken rule, guys, and I promise you, if you go back and start taking pictures of a market that stops cold at one of these areas, you're going to believe it. But you've got to take that picture, you've got to annotate that picture, and you've got to get it into your spreadsheet, guys. And then most importantly, you've got to come back and study. You got to come back and look at it. So that's what this 101 is designed to do, guys, to get you in there. And then I give you the high probability trend trade checklist sheet that shows you pictures, strong triggers, weak triggers. Make sure that you never confuse the two. No triggers through, not broken, not a clear path. Smalls above, large below, with momentum, potential to break, and then there's my clear path, guys. Know the difference between the three, because this look is going to have a lot to do with your management plan as you go into it. Here's your window of opportunity, exactly where your order goes, the things to ignore, the same thing for a long. And then the second page is the trend trade checklist. And this is designed to remind you what it takes to get you into a trade, to help you know that your rules are met. And I've never had anybody follow this checklist to the letter. And guys, I want you to prove me wrong. Get out there and try it. Prove me wrong. Never had anybody do worse than 70%. But I think the most advantageous part of this checklist is this is what I want you writing on your charts every time you take a picture, guys. I want you using the words odds favorable momentum, strong triggers, and pointing it out. And I want you to talk about termination conditions and use the words price reached an area, triggers below, no trades into this area. And then this is the most important, and this is the one that people tend to forget. Once you memorize this phrase, area inside of favorable large triggers, guys, you'll be able to pinpoint with insane accuracy where the market is most likely to continue. It's easy to say it. It's easy to show it, guys. You've got to learn to trust it. That's where repetition comes in. That's where you've got to use this spreadsheet, where you've got to look at these trades, where you've got to fill it with your own pictures. That's what's going to get you to where you want to be. But once you get these three very basic concepts down, and you have them individually, then here's your plan, brand new users. This is the KISS plan. This is the Keep It Simple Sunshine plan, because HR says that I can't call anybody stupid. Guys, this is just a stepping stone. This is the beginning. The high probability trend trade isn't your only trade. It's your first trade. It's your foundation trade. It's your best of the best trade. Your highest chance of success trade. You're building confidence trade. You're establishing trust trade. And most importantly, it's your learning to read your indicators trade. And it's designed to optimize your chances of success with the high probability trend trade as a new user. That's what the KISS plan is designed for. And then through simulation, study, class feedback, and continuous practice, you will be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That's my brother when he discovered AI. He put that in there because he thinks it sounds cool. Guys, that's a fancy way of saying when you can read your indicators, you're going to see a lot of opportunities. You're going to find more entries. You're going to find reasons to hold for bigger moves. You're going to find reasons to exit trades a little sooner. So focus on becoming a chart reader and define your entry. Get into the market where it's most likely to continue, because great entries create very manageable trades. So your simple plan, don't fight the large chart, guys. And I'm going to share this one because it makes me giggle. How to Commit Financial Suicide. One Easy Step by John Novak. My big brother wrote this years ago. Note that only one page has any information. All other pages are blank. Chapter 1, Warning Signs Your Friends are in Trouble. They are trading against strong triggers. One of the most common mistakes that new users make is they have this fear that if they're not the first person in, they're never going to get paid, guys. And what they'll do is they'll make really bad decisions against strong triggers. And that's one of the biggest account drainers, is fighting strong triggers on the large chart. And sorry, Pete, we're going to see a great example of that on your PBT trade. And then chapter 2, warning signs your friends are not paying attention, guys. They trade into termination conditions, into those areas that are likely to stop the market. These are the two most common mistakes. These are the two that cost new users the most money. These are the two that cost experienced users the most money. And those are the two that if you can from day one say, you know what, I won't fight that large chart momentum and I'm cool not trading into lines, you're 60 to 70% better than the rest of the world. You define your entry, you get into the market where the market is most likely to continue. You've done the study, you can pinpoint with accuracy, you're getting comfortable and confident with it. And then you're in that trade. And this is where the fear takes over, guys. Because management is scary, because now you have something to lose. And I don't know why, even on simulator, people get terrified. Remember that simulator it's the foam pit for the gymnasts, right? It's the driving range for you golfers. It's the batting cages for the softball team. Simulator is where you can't hurt yourself. Simulator, the only thing that comes out of simulator are great lessons and a lot of pictures. So we're going to work on management. As a brand new user, your management should be as mechanical as your entry. It should be if-then. And the goal is to remove as much emotion from the equation as possible. So I created this KISS plan management that really, in order to execute it, you've got to remember that the large chart leads the way. And you've got to be patient and wait for that reversal bar. And once you get it, you've got to find your triggers, making sure that you understand where the market is likely to return, and then believing in your heart that it's the areas inside of those triggers where it's likely to bounce, so much so that you put a limit order just below that area. See, these are all from the spreadsheet. You have these. And then saying to yourself, I'm not going to chase it. I'm not going to jump in. I'm not going to get in early. I'm going to wait for the small crowd to come get me. And if they do, I'm going to trade with every advantage. And the only reason that you took this trade in the first place is because of odds favorable momentum, because of strong triggers, because of that best, highest probability look on the large chart. So your initial stop on this entry, guys, is going to go where the market shouldn't. Outside of that window of opportunity, 4 to 5 ticks above those triggers. And this is the first step in management, guys. That first stop is either going to get hit, and it's cool, it's a normal part of a positive equity curve, or you're going to get that reversal bar in the direction of your trade because of the momentum, because of the clear path, because of the bounce. And if you get the reversal bar, this is your first stop movement. My new stop will be 2 ticks above that reversal bar, or in a long trade, 2 ticks below the reversal bar. And then I go back to sitting on my hands. And I say to myself, they're either going to come get me, which is all right. I'm not worried about it. I have all these advantages. I'm learning how to lose on simulator. I'm learning that it's okay to lose on simulator. And I'm learning that if I'm following a plan, I'm losing a lot less than I'm winning. So my first stop movement, and it's either going to hit my first target or it's going to hit my stop, and I will never, ever, ever be in control of which one it is. But with all the advantages, it's more likely to hit my first target. For the KISS plan, first target's $100 in the distance, guys. I've got traders that have been with us for years that still take $100 on the first contract because the goal of trading is to get paid. The goal is to get paid more than you pay. And that $100 builds confidence, and that $100 dries sweaty palms and gets rid of the butterflies in your stomach. And the $100, just to be honest with you, it feels good. It feels good to be paid. And that first contract comes off, and it's in your account, and they can't take it from you. And then you go break even. So now you have absolutely nothing to lose, and you've been paid, guys. And there's nothing to do. You're either going to get stopped out break even, or it's going to go to your second target. And I'm going to tell you right now, break even isn't the best stop, but it's the smartest stop for new users because it reminds you that it was odds favorable momentum and a clear path that got you into this trade in the first place. And you've got to learn how to sit still in the middle of a trade and not focus on ticks. It's either going to get you break even, or it's going to go to your second target. Your second target is $200 away from your entry, which means that you're out of the position with a $300 win if it goes to the end here. You're out of your position. You're no longer in the market. Nothing can hurt you. And you just made $300, guys, on the highest probability trend trade possible. And $300, some of you are like, but Mark, I've got to make $73,000 a day, or otherwise there's just no reason for me to do it. It's asinine, the goals people create for themselves in the beginning. In the beginning, guys, learn how to get paid. That's it. Learn how to make money. Learn how to get paid. Because if the best you do is $200, $100 a contract every day for a month, for a year, guys, that's 50 grand. That's 50 grand in your account. If the best you do every day is 1 to the end high probability trend trade, that's 75. You only have to make $200 a contract a day to be in 6 figures. Focus on getting paid. What do you mean, so don't join the take profits? I don't know what that means. And then, guys, the better you get, the more money you're going to make. The more contracts you add, the more money you're going to make. You can use a trade copier. And you can take that $100 every day and spread it out over 10 accounts. Take the same trade mirrored and turn the $100 a day into $1,000 a day, guys. And that's $250,000. So brand new users, what I want you to focus on initially is the process that yields the results. I do, Rob. I teach it every day. Well, it depends on the type of trade, but yeah, if I'm in a trend trade, I have 2 profits. I have the first one that gets me paid, and I have the second one that if there's the potential for a runner, it's off in the distance, and then I just manage my trade, and I look for fibs. Absolutely, I have 2. If I'm on a 2 lot, if I trade a 4 lot, I may have 3 of them at $100, and 1 of them is a runner. My goal is to get paid every day. But there's things you got to know, guys. Before you ever sit down with live money, on simulator, who cares? Break everything, right? Practice everything. Rob, practice 2 targets, practice 3 targets, practice 2 contracts, practice moving your stops, moving your targets, entering the trades, right? Practice everything on simulator. But when it's time to go live, you have to know why you'll enter a trade. And you have to know why you'll exit a trade. And I'm going to tell you right now, number 2 is the most ignored part of a trading plan. Everybody wants to get in because they believe that the entry is what gets them paid, guys. Your management is what's going to pay dividends. Your management's going to be the reason that you're putting money in the account. The entries are easy, but all it is an entry. It's what you do with it. Commit to having the rules met. I can't stress this enough. You have 2 options. Either your rules are met or they're not. And it's funny because everybody in this room comes back at some point and says to me, Mark, it's wild. When I follow the rules, I win more than I lose. And everybody says it. And it's pretty cool when they say it because we all have to have our own aha moment, that we don't have to be in every trade, that we don't have to break rules, that we don't have to fabricate. We just simply trade with a statistical advantage. And the rules should be patterns proven to win more than they lose. And if they don't, they have no place being in your rules, guys. And the more consistent in action, following the rules, the more consistent in profits typically. And it's your process that yields the results. This is the part I can't stress enough. It's the process. It's doing the same thing every time with zero regard for the outcome because you've already done the study. You've already proven that it wins more than it loses, guys. And the rules help to remove the emotion associated with trading. My brother used to tell me, and this is like 2 or 3 years ago, he used to say, I don't care if it hits my stop. And I couldn't even fathom the idea that losses couldn't bother somebody, that losses didn't affect the mentality, didn't force you into revenge trading, that losses weren't this giant just stick in the side. And what I realized is that he believed in his plan. So he knew that losses were a normal part of it. This is the trust that I want you guys to get to. So if you're in a high probability trend trade, if you're brand new, so white dog, your first 30 days, you know exactly what it takes to get you in. We're going to learn it together. We're going to get you there. You're going to be comfortable with it. You're going to be confident with it. And then initially your KISS plan is going to be why you exit, because we're learning to trust the methodology and you're learning just to be comfortable and confident to trust that large chart. But eventually you're going to grow and there's going to be more reasons, and you have to know each of these reasons once you venture outside of the KISS plan. And then if you add a second trade and you don't understand the first trade, you're going to confuse rules, you're going to confuse exit strategies. And if you try to do that third trade that you saw somebody taking in the room, now you've got 3 sets of rules, 3 different management plans, and you're ill prepared. You're just not there yet. So I encourage you guys, keep it very simple in the beginning. Keep it very focused in the beginning. You've got nothing but time. My brother's promised me that he won't fire me for at least another 6 months. Plenty of time for you guys to learn everything that you need. And I'm giving you right now in the room. So you can take these, for those of you that can't see the chat box. I put exit conditions, which is the you have to know why. I put my high probability trend trade checklists. I put the KISS plan. I put the order of picks. That's the PDF version of the PowerPoint that I used to teach every day. I put chart reading 101, and I put that daily goals in there. You now have everything that you need to be successful with the software as a brand new user. You have every tool that you need. You have a very clear, concise set of rules, and you know how to study them. The only thing that I neglected to give you guys was experience. The only thing that I can't put in your hand is repetition. That's on you. You've got to go through now, and you've got to start taking pictures. And you've got to go through, and you've got to start recognizing these patterns, and you've got to talk about them, and you've got to picture them, and you've got to share them in the room, and make sure that you're comfortable with what you're looking for. And then once you do that, man, I got so much stuff open. You just start looking at the market and you say to yourself, hey, look, I've got odds favorable momentum. These areas have the potential to break, but they're not broken yet, and I haven't reached an area. I wonder if they'll give me a pullback to an area inside of triggers. But if they hit these lines before they give a pullback, whoa, that was fast. Was there news? There was 10 a.m. news. There's my reversal bar. I reduced my risk. Where's $100? There's my $100. Now I'm break even. Where's my 200? 36, 32. There's the $200 target. I've got nothing to lose. I've already been paid. I have momentum. I haven't reached the area. Did you guys see how quickly that happened? That's how fast you're going to be able to do your reads. There we go. How's that for a quick little run? $300 straight out of the gates. So does it work? Sure does. Watch this. For those of you that need to study, there's my tail. There's the top of my pullback right at resistance, right inside of triggers. I was able to make $300 on this trade in, what was it, 8 seconds? I love it when you guys don't think this works, because now you just watched it live. You got to go back and study it. I don't handpick pictures trying to wrestle you into something. Can you give me a why if you saw it? Because I'm going to take a break, but I want to strut out of my office. Nobody? Right on. You guys take 5, stretch your legs. I'll be back in 5. And when I come back, we're going to look at pictures, guys. And we're going to look at pictures, and we're going to talk about 3 things. And we're going to talk about entries, and we're going to talk about exits. And I want you guys to talk about momentum, clear path, and where you got in and where you got out and why. And then for you newer guys, White Dog, do me a favor. Go to your search bar and type in Tech or Tech Smith. And guys, this is what was put on your computer so that we could share pictures with one another, so that you could tell me what it is you see. If anyone needs help using TechSmith, posting in the room, let me know. I'm more than happy to help you guys out. I just need you to ask. I can't see your faces, but if you're the shy kind, here's the how-to. And guys, this is how you're going to get to where you want to be. And I can't just take that trade and leave it, so let's do this. This is how every chart should be annotated. I had odds favorable momentum. And I'm going to write this out. Price was close, but did not reach the area. So my path is still clear. With momentum, that line has the potential to break. KISS plan entry and management. Easy, $300. Never miss this one. Now I know exactly what it looks like to be successful in a short trade. So I take that picture and guys, I post it in the room and I say, Mark, did I miss anything? But what I really want you guys to see is how quickly I was able to recognize the conditions and enter the trade. And that is a byproduct of study. So I'll be back in 5, guys. Post them if you got them. It's moving pretty quick. Well, I think there was 10 a.m. news. Wasn't there? Didn't we decide that there was... Yep, Jolt's job opening. So I may have traded into news. All right, guys. I'll see you in 5. So Jerry, the same way that you put it on the small chart, you're going to right click on your large chart and go to data series and just scroll down to the very bottom and make sure that it's text and marker. You have to do that individually for each chart, but that'll make it show up for you. Hopefully you were here and got that. So here we go, guys. Odds favorable momentum once again. Only the potential to break, not a broken area. Whoops. And then, guys, divergence. Loss of momentum is one of the biggest killers on these 50-50 trades. When the area only has the potential to break, divergence is one of the biggest reasons that they lose typically. It doesn't always, but if you look at the KISS plan, when you talk about potential to break, divergence being there, you're seeing the fight right at the key area. They're telling you that that we're losing momentum right at the key area. And it's okay to not take that trade. So I'm going to scroll up and I'm going to find the trades that you guys have posted. And honestly, I think there's like 3 of them. So just like yesterday, guys, I'm going to need some questions. And if you're brand new, like White Dog, I know you're day one and you're like, I don't want to ask questions. I'm just listening. Feel free. Ask a million of them. We'll go through it. We'll have fun. This entire 3 hours can be 101 lessons, and I don't have any problems with that at all because there's always something to learn. All right, Pete, weak bottom. Hey, good morning, Tom. Good to see you, man. So when Pete says a weak bottom, what he's saying is that it wasn't a Fibonacci area that reversed the market. It kind of came from the middle of nowhere. Yeah, Kurt, it's moving today, brother. Well, it didn't move yesterday, so it makes sense. And then everything is up. And Pete has a trade that says when he gets to these really high time frame fibs, he'll take a shock counter. And the one thing here, guys, remember financial suicide, the easiest way to get run over is to fight that momentum. Strong triggers for the win here. And Pete has it in his plan. And guys, I'm going to tell you right now, there's people in this room that will trade ways that you don't. Pete's trade isn't wrong. Pete's trade is perfect for Pete, and it's very low risk, and he's willing to take that shot because of his understanding. But Pete's also a very accomplished trader. And when this one fails, he knows without question it's the long. And he gets in on a momentum style long. He uses the momentum. He uses the fib. And the most important thing that I want you guys to see, once it cleared fib, went long. Once it cleared the fib, once it got past the decision-making point, that's when Pete went long. And it allowed him to make some great money. 33 tick gain all the way up. $1,100, first trade of the day, guys. That's a hell of a first trade. So Pete, great trading. I know why you took this one. But guys, fighting momentum, it's not your best bet as a brand new user. Pete studied that look for a long time before he added it to his plan. Andy Man. I'm trading sim and thank God. I broke a rule because my eyes are not awake yet. Trading right into trouble. In and out. Trading right into termination conditions, right? And with divergences against it. That's a tough look. So Andy, good job realizing you made a mistake and just adjusting. It's hard to do that, isn't it? It's hard to make a mistake and then go, oh no, I shouldn't be in this trade and hit close, right? Because that nasty little what if monster sits on your shoulder and says, yeah, but Andy, what if it works? What if it runs? What if all that support breaks? Man, you'll be rich. And then you hold on and then it just spikes up and you're like, that little what if monster, man, it's a bad one. All right, Mr. Flowers. Momentum is met. I agree. Clear path. Oh, I disagree completely. Are you with me, Paul? Do you see your large triggers up here? All right, so we're going to have a lesson. And guys, this is important, and this is why annotation is so key. So there's a couple things. First, whoops, I don't know why I keep grabbing that. Do you see these one-to-ones? That the trigger lines didn't break? So you're actually trading directly into a termination condition. This fib hasn't broken because the smalls and large aren't through. These two fibs have the potential to break. These one-to-ones are 100% termination. And then the fact that your triggers are all the way up here above that reversal bar marker says that price is likely to snap back. So that's okay. A lot of problems on the large chart on this one, especially from a weak top. But let's go beyond that, right? No divergence. Separation between the small and the large, letting me know that there is strength. And you did enter at an area inside of triggers. The challenge is, do you see how your large triggers are all the way up here? And it's likely to close that gap. So where was your initial stop? Somewhere here? Or did you say, let me put it up above the fibs? Or did you say, let me put it where it belongs, where the market shouldn't go? In which case, that is an enormous, enormous amount. But 20 is an arbitrary number, right, Paul? 20 is not at all where the market shouldn't go. 20 is just a number. 20 doesn't know if that's your age or your shoe size or your IQ. It's just a number. Stops have to go where the market shouldn't. And that's one of the things, especially on the NASDAQ, man. Adherence to rules is going to pay dividends. And I love that you got one over on them. And there's things that look good and there's things that don't look good on this trade. But you're trading with momentum. You're trading with the trend. You're trading from an area. And you're trading back to the areas that are likely to create trouble. So the only thing that I would say is just be aware, right? Because when that path isn't clear, it's pretty important that you get your management hat on, just in case things go south quick. You're welcome. It's a great post. But you're focused on the right things. You're focused on momentum. You're focused on a clear path. Now we just need to make sure that they're actually happening. And then guys, when I said that you can build a plan on momentum and a clear path, price clears trouble, all triggers up, strong triggers, quick trade, boom, boom. Base hit times 4. $400 trade, guys, in a matter of seconds. Momentum and a clear path. I'm telling you, those are the two. Those are the two. Once you figure those two out, it's crazy what you'll be able to see. 550 on 4. Now you're just bragging, Ron. 550. That's awesome. Oh, ES, right on. All right, Jen. Odds favorable momentum? Yeah. 50-50. Notice that she references that the areas aren't broken yet. I will. I can do that. No divergence and strong triggers. And then, Jen, you're in between, right? You're not inside a favorable. You're hovering in between synthetics and large. Do you see that? Here's your lines inside of triggers. Here's your other lines inside of triggers. And you're kind of in the middle. Was your stop up here? Where the market shouldn't go? Cool. Beautiful, right? And then it starts to go down and you reduce your risk. And you're like, you know what? I think I'll take profits at the line. And you said, to hell with it. I'm going to add on. And you make more money. That's a happy little mistake, right? That's the Bob Ross trading. I had one of those this morning as well. Beautiful trade. Momentum, potential to break. trading from areas, correct stop placement, get paid. Is it a real pretty high probability trend trade? Absolutely not. Is it brilliant from a chart read? Absolutely it is, guys. You're going to find that once you understand the very basic concepts, you're going to be able to break outside of them a little bit. You're going to find ways to make money that aren't high probability trend trades. And that's kind of where the study comes from. And then Ron wanted me to show mine. This was mine this morning. Everything says down. The path is absolutely clear. That's okay. Rusty brains, work through it, right? And I take advantage. I take Ron's trade to the south side. I usually trade a 4 lot. I accidentally double tapped and went pop pop. Jen. I had jittery coffee fingers, so that was an 8 lot. So that was a little over $800. Little over $800 in about 4 seconds. Kind of nice. Sergio, is your simulator at 0? All right, so what you need to do, let me go to the instructions real quick. You're going to right click on your account and you're going to edit the account and you're going to reset the account. And then that'll put you back at $100,000 and you'll have all the margin that you need. There you go, bud. All right. Who gets to be next? We saw Ron's. We saw Miss Jen's. Morgan, 70 bucks is 70 bucks. 50-50, no divergence. And then Morgan, you're going to give me heartburn, right? Right on. Andy, have a good one. Entry inside of synthetic triggers, not entry at an area inside of triggers. It has the potential to break, and it goes down to trouble. In at 38, trouble was 35. And then you get out, I can't tell where, maybe 36.75. So Morgan, one of the things on these 50-50 trades, it's in the KISS plan. And it actually says, get paid at trouble. Right on. Well, it wasn't. That was your entry. Area inside, no divergence, strong triggers, potential to break. And then you've got to say to yourself, you know what? This isn't the perfect trade. 34, 35 represents the point where things can go bad for me. It's okay to get paid right there. Because that's 3.5, right? And you're close on it. I think it's a decent look, and you managed it well. So, good job. They're not all winners, guys. Great management still gets paid. No, it'll be tomorrow, Jen. Crude oil inventories will come out tomorrow. You're welcome. Boom, boom, boom. Triggers rolled down, separated, odds favorable, not a clear path, right? It's a 50-50. Market pulls back. There's Jen's entry. But I like this. Pete says, you know what? I don't like this trigger look. That's kind of ugly. Let me let everything roll in favor of it, and let me just use that momentum to get to the next key area. I absolutely love that. This is chart reading, ladies and gentlemen. This is getting to that next level where you really start to flow with the charts. Everything says down, but the path isn't clear. And look at how wonky his small chart is. And he just says, with this look of momentum, this market's likely to hit that line. I'll just get in when everything agrees. And I'll take it right down to that line. Absolutely beautiful. And then I don't want to skip this part. Put you over the daily goal. $1,700, guys. And it is 10:28 a.m. in the eastern side of the world. Eastern side of the states, guys. 10:28 a.m. 7:16 wherever Pete is. So probably West Coast somewhere. He's probably Pacific Northwest hippie or something. That's not a bad time to quit working, is it? Now you just got to go play golf. Go shoot some guns. Bake a cake. Something. Arizona, desert rat. I like Arizona. I spent a year out there. My oldest kid was born right outside of Scottsdale. We were too broke to be allowed in Scottsdale, so they made us have them just outside. And then Morgan, I think you did a good job with it. That's one of the reasons. I don't know if you're sim or if you're trying to trade live markets, but your trade, Morgan, is a beautiful example of why 2 contracts is awesome. Because you guarantee the payment, right? And then if it goes, you still have a contract to run. And if it doesn't go, it's okay. You get out break even or something like that. I used to fight the 2 contract thing all the time. And my brother's like, I'm telling you, it makes life easier. And he was right. And I hate it when he's right. But he was right. It makes life easier to trade 2 contracts. Because it's easier to be okay with getting paid and then go and break even. And you just don't care what happens next. You're like, it's either going to be $1,000 or it's going to be $0. But nothing, no harm can come of it. I like that little bit of freedom. Yeah, and I think doing it on Sim, yeah, you're over leveraged at 4, Morgan. On almost any Apex account, 50 grand, you're over leveraged. 2, if you can't make what you need every day with 2 contracts, you need to spend more time on your trading plan and your understanding of your rules. I firmly believe that if you can't make $500 a day on 2 contracts, it's not the contract number that's holding you back. It's you. Not you specifically, Morgan. I'm talking to the entire class right now. Everybody thinks, well, if I just had more of this, more of that, right? Then if I took more trades, if I traded more contracts, if I just had more charts to look at, well, then I would be successful. And guys, it's such flawed thinking. It is such flawed thinking. And I can tell you right now, the people that look for everything typically find nothing more than the losers. And it's crazy that it doesn't take a lot to make a lot. And if the trade is working, you can always add on. Amen. Yeah, but Morgan, you're going to hate this answer. And I know that you're 10 feet tall and bulletproof. It's one of the perks of being 25. There's a simulator. And if you're not comfortable taking trades yet, why the hell are you live? Is what somebody that gave trading advice would probably ask you. It'd say, why the hell are you swimming in the deep end if you're not, if you don't know if you can swim or not? Well, and that's, guys, everybody's bulletproof on Sim. Everybody is. Everybody has the testicular fortitude to make $100,000 a day on Sim, which is why there's a level of self-policing. Are you making it because you're taking the right trades? Or are you making it because you're like, well, it's sim, so let me do this, right? And let me sell the market real quick. And if it goes down on my 29 contracts, hold on, I should probably put my stop way up here, right? Because that's where the market shouldn't go. And then I'll put all of these right here, and I don't know, it'd be awesome if it hit it, because that's what people do on simulator. Now that I'm going back to annoy the crap out of you as many charts posts. Not odds favorable momentum. Jen, wait. I love that. Jen says, Mark, why did you go short without momentum? I'm trying to prove a point. I was hoping this would come down and give me 5 ticks. Because what happens here, I could reverse it and then it would definitely go down. But the point that I'm trying to make is that people do that. They get lucky on simulator, right? They're like, hey, check it out. No, I'm not. And tart is the right word there for sure. But they go, oh, look, I fought momentum and I fought direction and I fought everything. But I just made money. So that's my trade, right? And guys, this is the problem with simulator, is you do stupid stuff thinking that it's going to carry you when you go live. But there's cameras everywhere. They know. They want you to get lucky on sim. Because when they need someone on the other side of their winning trade, you're the one that's going to be it. So make sure that you're practicing the right rules. And Morgan, that goes back to your little thought there. It's easy to be brave on simulator, guys. It is. We've all done it. I've done 100 contract trades against the trend on simulator, like woohoo! But it's not a setup for long-term success. So good stuff. It's always easier to trade with the trend. But Jen, you're absolutely right. I'm going to go back to your picture. Whoops. And I'm doing this because, one, Jen annoys the crap out of me, and she knows it. Not really. You don't at all. Earlier I said that the best education doesn't come from your trades. That the best education is going to come from what you do outside of your trades, from the study that you commit outside of your trades. And Jen has done this a lot, and I think that it's brilliant, and don't you ever stop. Jen will say, hey, look, my rules aren't met, but let me take a picture and talk about why my rules aren't met, because if I'm not talking about them when they're met, if I'm not talking about them when they're not met, I am more likely to break my rules. So what she's doing is she's reinforcing the idea that this isn't her trade. And even if it goes down, it's not her money. Because her money revolves around momentum and a clear path. And guys, it's one of the smartest things you can do. And when I take pictures, look at it go up from there. Jen, I hope you're feeling good about that right now. And I'm just going to use this picture, and I'll print over it so I can type. These are the pictures I think everybody should take. You should take a pre-picture. Are my rules met? Right? You should take an entry picture. Are they still met at entry? Because guys, sometimes we see trades and we want to be in them, and things change by the time we get in. I take a during, so I can work on management, and I take an after. So what's the big picture, right? Start to finish. And one of the things that this does, and this is trades, and then there's one more, when my rules are not met. Take a picture and type it out. And you're doing two things. The first thing you're doing is adherence to rules, building patience. The second thing you're doing is maybe you start seeing patterns that do win more than they lose outside of the high probability trend trade. So the more pictures you take, guys, the more you're going to get. But I think some of the most important ones in the beginning is every time you think you have a trade, do this. Go through and take pictures and pictures and pictures. And what I'll do is if I take a picture pre-trade and I think that everything is met, right? If I go back and I lose that trade, I can look at my pre-trade picture and make sure that my rules were actually met. And it helps me go through and make sure that those advantages were present. When I take a picture of the entry, I can say, well, did I get in at the right spot? Did I follow my rules? Did I get in at the areas inside of favorable large triggers? And were my rules still met? Because one of the things that happens is we'll see a trade with the potential to set up, right? And 5 minutes later, everything has changed. And this is what I call getting married to a trade, getting married to a short, getting married to a long. And by the time you get in, the rules are so far from being met, but you were so convinced that was your trade. These pictures will help you identify that. This is good for you guys that jump out early, because you take a picture where you jump ship early, and if you have that during picture, you can stare at it and go, well, hell, everything was still good. And then, of course, after, guys, from start to finish, from entry to exit, advantages, entry, exit, and that's the one that you're posting in the room to get the feedback. That's the one that you're showing me so that we can talk about your chart read, so that we can make sure that you guys are good. And then, of course, when the rules aren't met, like Jen did, saying, hey, I don't have this advantage. I know I'm not supposed to take a trade, but I still want to. But I'm going to take a picture and annotate it instead. And that's a pretty cool picture to take. And then Jen, patience is your biggest Achilles heel. Me too. And those pictures keep me from trading. And look at that. Your rules weren't met. Take care, White Dog. It was great having you. Can't wait to see you tomorrow. Get that power cord. And look what weak triggers. Look at the retracement. Isn't that crazy? I don't touch it, Belt. I don't need it. I've never traded the RTY, to be honest with you. But yeah, if it's a 5-1 or a 13-2, I get rid of the magenta 1-to-1s. There's just too many swings that create them. It's just a distraction for me. So there's your answer in 2 parts. No, I don't. But if I did, yes, I would lose those on there. For me personally, you might want them. Some people find a lot of value in them, to be honest with you. I'm just not one of those people. Pretty much. That's it. I focus mainly on S&P and crude. But some days the NASDAQ, it's like the siren song. But the cool thing is, Belt, is I have a plan for everything. I don't go into a market to trade it if I don't have a trading plan specific to that market. For me, the S&P and crude oil is pretty much the exact same plan. For me, the NASDAQ is a very different plan with very different entries because of the speed of the market and the size of the charts. That's the whole thing. Someone was asking me, hey, Mark, talk to me about NASDAQ. I think I'm almost there. And what I figured out is this is the only picture that you need for entries on the NASDAQ. If you're trying to be a NASDAQ trader, the rules are the same on the large chart. These are the only things that I look for on the NASDAQ. Is the relationship of the trigger lines to price. Pays dividends. And Belt, you may love the RTY. I know you trade gold. I personally hate gold. I won't trade it. I refuse to trade it. Gold is that girlfriend that cheated on me 3 times and I keep asking her to go out with me again. There's something about gold and it never ends well for me. So everybody will trade what they trade, right? You'll find your happy spot. Your gold is 50-50. And see, to me, Those odds aren't acceptable. 50-50 is not an acceptable odd for me. If I'm not at least 70-30, it's not a part of my plan. I won't do it. Ron just finished his day off. Ron, show me that 4-lot base hit and go to the beach. You only like gold when the markets have closed? Yeah, there's a couple people that do that. There's a few people. You'll see him over in Traders Chat in the evening. Pineski, I don't know if he's in here. Paul loves gold, and he kills it. He absolutely kills gold. He's so good at it. But I've never bothered to ask him his plan for gold because I don't need it to reach my goals. And that's one of the things you have to ask yourself as a trader. Do I need more trades to reach my goals? Do I need bigger moves to reach my goals? Do I need more markets to reach my goals? And if you're not sure what your goals are, well, then you gotta figure that out. What do you need to make every day? Not what do you want to make, right? We all want to make $1 million every day. Who wouldn't? What do you need to make? What's a realistic goal in the beginning? For me, $500 a day is a very realistic goal. And there's days where I make more. Like this is just simulator, and that's all pre-market except for the 300 that we did. They were giving it away this morning, and some days there's more and some days there's less. But you have to know how much you're willing to put yourself out there, I think. And guys, that's all of our pictures. And then crude oil is just grinding up. S&P, it's not odds favorable momentum. But look how resistance broke and behaved as support. How cool is that? If you guys don't think people know where these key numbers are, they definitely do. What do you guys want to talk about? Work with me here. Stopped out with profit. What a great way to be stopped out. Everything says up. Strong trending market. Buy the mid-band till it quits working or you hit a line. So, Bell, the only thing I could say about this one is why would you not get paid at a big red line, right? I mean, we know that it can stop the market. It has weak trigger. I guess the other question would be, why the hell did you trade into that big red line? Probably because you didn't get paid all the way up to it, right? But I mean, that is textbook weak triggers, red line, no more long trades. And this is what's dangerous, is when you make a couple ticks on these and you think that it's the right trade. That's what's dangerous. You had weak triggers, you had no clear path and no areas inside of favorable large triggers, and you pulled the trigger anyway, right? So on these belt, this is where I ask you respectfully to annotate your chart and tell me why. When you are so far outside of anything that I teach in this room, this is where I need you to annotate your charts. And then crude, Sergio, from the ATM, I'll either do a 2-lot, 12 tick stop, or you can do a 4-lot 12 tick stop. So I set up 12 ticks, but 12 ticks isn't my stop, Sergio. Where the market shouldn't go. 12 ticks gives me time to react. Does that make sense? 12 ticks gives me time. Yeah, so for crude oil or S&P, I'm using 12 tick stops. If you're a NASDAQ trader, 24, it's the same amount of money. It's just a different approach because the ticks are different. But those are all in there for you. Here comes crude. Look at those weak triggers. Wow, and down it goes. And then Bell, you had a line there. And there's our potential to break. Kind of kooky. No, Morgan, it's because buyers and sellers have goals. It's because the large crowd wants it to move. Guys, don't try to figure out why the market does stuff. The market is nothing more than up and down ticks. That's all it is. And some days, some people are wound, right? And the coffee was extra fresh. And some days, they can't agree. And it's like they just stall out. And today, there's a pretty good fight going on, right? Belt had a fib right there. But all it is the buyers wanted it to go up, and the sellers said no. That's it. So we look for our patterns within their fights. Sellers wanted it to go down, and you could see that the buyers were stealing their momentum all the way. And then the buyer said, ha ha. And the seller said, seriously, we wanted it to go down. And the buyer said, we've got some key areas here. Maybe we'll stop you again. Maybe we won't. I don't know. We'll see how we're feeling. But the cool thing is every one of you knew that there was a line there. Getting a little motion sick. And look at the reaction off of the blue fib. But why didn't it do that at the other blue fib? Well, because the buyers weren't ready and the sellers weren't taking profits. But we know where they're at, guys. We know exactly where they're at. And we've got a plan that keeps us safe. Even if you didn't have a fib up here, weak trigger said that longs are likely to fail, right? Untradeable bounce, and then just a reversal. And now we're back into support. And none of the triggers have broken. And I've already got one loss of momentum. And now we're being patient, just like Jen said. Bad top, no clear path. Large triggers a full bar away. And it's likely to close the gap to the large triggers. And it did. Guys, this is your look when the midband is a termination condition. Absolutely no clear path. And if you tried to go short, despite that termination condition, you got run over. And now let's see if they were trying to get up to this area. Because they tried, right? And then the sellers pushed back right to those key areas. And look at the fight that happened right at the key areas. Are you guys seeing this? Because this happens every day. You just got to scroll through it and watch it and learn to trust it. Believe in it. Most powerful tool you'll ever have. All right, guys, I'm going to take 5 minutes. Do you guys want to watch crude oil or do you want to watch the S&P? Let's watch crude oil. They're going crazy. Post them if you got them. Ask a question if you have it. I'll be back in 5 minutes. And I'm going to tell you guys right now, you're not posting pictures, which is okay if you're not taking trades. Don't feel like you have to take trades to post pictures. But this is the best opportunity for you guys to ask questions if you have them. When people aren't posting pictures and I'm struggling to fill time, guys, all you have to do is start rattling off questions and I'll answer every one of them. These are when you get the most out of the conversation side of things. So I'll be back in 5 minutes. Go stretch your legs, guys. All right, guys. Jonathan, why did you post if you'll be back in 10, silly? Guys, if you know you're going to be back in 10 minutes, just post in 10 minutes. I'll give Jonathan some grief when he comes back. Kurt, loser from yesterday. Odds favorable momentum. Like it. Clear path. Was it a clear path? So there's three options, right? Let me take a picture of your picture. So here's the fibs in question. Kurt, are you with me? Cool. So there's three options. There's clear path. I'm going to type these out because we're going to get some lessons today. There's clear path. Let's make that bigger. I don't know why it's so small. There is 50-50, potential to break. And then there is termination, right? So it's always going to be one of those. Clear path means that both the small and the large triggers have made it through the area, and we haven't quite gotten that yet. But the smalls have absolutely smashed through, so we know it's not a termination, but it's also not a clear path, which means that it has the potential to break. Does that make sense? And the only reason I do this is check this out. If I know it's only the potential and not a clear path, there is a different management strategy. Actually, there's a different entry management scenario. And this is why knowing what you're getting into pays such huge dividends. So no divergence on the entry is absolutely beautiful. Strong triggers, absolutely beautiful. And then Kurt, your entry on this medium probability trade, whoops, was right here. Down at the areas, right? And you said that you took the conservative route and entered after the pivot. But what you actually did is you cut yourself short on having any ability to make money if this trade fails. By not entering at the area right here at those triggers, you robbed yourself of 2.5 points, which means that you probably would have made $100 by here and been break even. When divergence prints, it tells you to get out of the trade. Does that make sense? Because this is one of the things, and I used to think that too. My reversal bars are giving me a much more conservative entry, but the reality is that my rules were met to take it at the areas. Potential to break, strong, no divergence. Everything that I ever have learned in my life said take that area. Your risk is 2 or 3 ticks, but what it is you've got room to manage if something fails. So great trade. It's a good look. And this is one of those times where confirmation doesn't necessarily pay dividends. Thank you for sharing that. That's a good lesson in there. Well, you need to have your rules, right? You need to have rules. Gosh, I know I'm a broken record. And I'm okay with it. So there's your rules, right? And it says enter at the area right there. And if you keep it simple and focused and stop trying to change rules in the beginning, not you, Kurt, everybody. Stop saying, well, I'll do this even though the rules say that, right? It's that consistency in the beginning. Yeah, get good at that and then start changing your rules. 50-50, strong top, odds favorable, in at the area, stops in the right spot, out at trouble, no harm can come, Absolutely beautiful belt. That strong top pays dividends. What a great trade. Nicely done. And then odds favorable, clear path, perfect entry, money, money. Nicely done, belt. They don't have to be difficult, right? Momentum and path, easy money. Momentum, not quite path, momentum for the win. Momentum makes it manageable. Sometimes we get lucky. It is, but you've got to learn to trust it. And I think that's the hardest thing. Is guys, we all come into this and we want to be successful. We all come into this and we want to get paid and we want to get rich. And we all want to be rich yesterday. Nobody feels like they should have to put in the effort. And it's not intentional. It's not because we're all ugly people. But we all have this sense of entitlement. Well, I paid for software. I should be making money. It just doesn't work that way, right? I paid for the lawnmower, but it won't mow the lawn for me. So just something to think about. And going back to simplicity, I can't stress that enough. Can't stress that enough. We're going to go story time. Actually, no, don't. I want to do this. So I sent my brother the trade. Guys, this is why having a coach is important. I want you to see something. So we talked in the room. You guys remember, we took this one in the room. This is my life with John Novak as my mentor. So we said odds favorable. We said price was close but didn't reach the area, so my path is still clear. Does everyone remember that? And this is exactly how my brain thinks to teach. I think path, momentum. And my brother threw this whole other level in there that I don't even talk about. And it's really letting you know why we wait for the pullback to area. He's like, it's not the low of the bar prior to entry. Room to target is calculated from the entry. And so because he wasn't in here, he was doing his own thing. He thinks that I'm saying, well, we still have room because the bar didn't touch. We just didn't have a termination condition because the bar didn't touch. But we had a ton of room, even though it was so close, because we calculate from entry. And it's something that I didn't even occur to me, didn't even think about it, was not at all on my mind when I did it. But it's one of the things, and it's one of the advantages of the entries, guys. And let me show you. This is a great example too, and I like this picture for the example, and I've used it before. From the top of the bar to trouble is 8 ticks, guys. You have 8 ticks to get to trouble. And a lot of new users will say, well, crap, I don't have room to my target. Has anyone ever done that other than me? Well, there's just not room. I guess this isn't my trade. Anybody? Just me? And then when we take a pullback to an area inside of favorable large triggers, that 8 magically becomes, I'm just going to, so I don't have to type too much, 28. And this is one of the reasons why I talk about great entries, why I talk about getting in and waiting for the areas, because you go from having absolutely no room in your head, but because of rule number 3, you've got all that room to reach your target. And I didn't even think about that when we were doing that trade in the room. Room to target had nothing to do with my thought process because I know that by waiting for a pullback, it increases the room. And my brother was nice enough to say, dude, like that's valuable. That's a lesson. And it's a good lesson. And then Kurt, we took this loser in the room, right? We took it in the room. Why? Because it fit the rules. It does kind of make you feel good when you go back and you're like, hey, wait a minute. The rules are the rules. And it's when we form opinions about the rules. When we say, well, I've got a gut feeling I'm not going to take it. Guys, you can't do that. It skews it. But this is a picture, Kurt, that I would put in the spreadsheet for study purposes. Because it has everything. And I'll put didn't work. Doesn't faze me a bit. I'll share it with the world. This is exactly what we're looking at and looking for. So congratulations, you just made the Hall of Fame on a loser. Good stuff. Jonathan's back. Let's see what Jonathan's doing in the wonderful world of day trading. Oh, Jonathan. No, I saw that you'd be back in 10. I was waiting for you to come back. Man, I got to be proud for a second. So odds favorable momentum. You let it get to the other side of trouble, and then you take the perfect momentum style trade. You let it bounce right off that fib. You're a little late on your entry, actually. And then you get out at the next line of trouble. Beautiful trade, Jonathan. Pretty effortless when you have all that momentum, isn't it? What a great job. How could I get more? I don't know. Trade 150 contracts. Hold on through termination conditions. Or I like Ron's. Take the same look again. That's not your only trade, right? But this trade, what was that? Is that 12 to 22? No. So you made $100 on this one. You want to see something? And this is what people don't get. So watch this, Jonathan. Here's how you get more out of it. Oh, you're going to hate this answer. Did you see that giant blue line on your chart? Right there. Huge blue line, right? Just, oh my gosh, looming in the distance. So if you just would have exited at that blue line, that was $70 difference between this trade and getting out at the line. $70, Jonathan. There's 252 trading days a year. Have a plan for exit, because there's absolutely nothing in the world that makes sense about just jumping out, unless that's your target, but it wasn't, because it hit the blue line and bounced, and it was that bounce where you gave $70 back. Jonathan, is there any reason you can't get paid at the line and then just get back in when you clear it? I think Pete said that earlier. You can always add on or get back in. So how do you get more out of it? Have a plan for exit. And guys, it's okay to get paid at these lines. You paid good money for these lines. These lines are freaking amazing. Sometimes they break, and you have to be okay with that. So Jonathan, that $100 trade could have been a $170 trade. You could have almost doubled your money by trusting the lines. Kind of cool, right? But in the moment, the only thing you were worried about is not giving it back. And I know, because I've been there. I know I'm directly into a giant fib, so let me put an arbitrary stop. And what this, and God, can I talk about the psychology of your stop? So when you reach the line and you put your stop right there, do you know what you're saying? By placing my stop there, I'm saying I know that line can stop the market. I know that line can create a bounce. I don't want to get caught in the bounce. Does that make sense? That's pretty much what it is, right? Why else would you tighten your stop there if you didn't know that it could stop the market, that it could create a bounce, that it could even reverse the market? That's why you tighten up next to that fib. So what if you took this? Bum, bum, bum. Get rid of that silly stop. And changed it to that. Because Jonathan, you clearly believe in termination conditions because you waited to get to the other side of one. You clearly believe in the power of these fibs because you got tight on it when you hit it, right? So you have to change your mentality. The same things that make you patient here have to get you aggressive on taking your money here. Does that make sense? Getting paid at lines, guys. One of the things that I say every morning is when you learn how to read your indicators, when you really become a chart reader, and let me go back to it. You're going to understand where the market is likely to continue. Jonathan, you nailed it. You're going to understand where the market is likely to go, what a great place to take target profits, and you're going to understand where the market is likely to stop. And I don't know if you put it all together, but you have a brilliant grasp on those three things, Jonathan. And now all you have to do is keep repeating the same process. Keep doing the same thing until you trust it enough to get paid at that line, even if that line breaks, because you know that you're good enough to catch the next trade. And guys, that's like the next step. When you know you're going to find the next trade, it's easier to get paid. But your brain's going to try to force you into believing that that was your last chance at money for the rest of the day. It's just not the case in most cases. So Ron, everything breaks with odds favorable momentum. And you just get in and get out. The Jonathan trade, I love it. So Jonathan, he made more than you, and he didn't even hit a line. Maybe getting paid is the goal. I know, right? Getting paid is the goal, guys. I can't stress that enough. The only reason you should even be here is because you want to make money. Why are we all so hell-bent on giving it back? Do you ever ask yourself that? Why am I so hell-bent on giving money back when the only reason I'm here is to make it? And there's an easy way to make it if you follow some rules. So, good stuff. Ron, nice trade, man. Thank you for that. You will sink to emotional trading. Yeah, we all do. And do you know what it is, Jonathan? All it is it's a trust issue. You're just not there yet, but we all get there. I promise you, we all get there. Eventually, right, if you took that long, that red line is a beautiful place to get paid. But I think what helps a little bit is if you go back, and of course, crude oil's been kind of weird today. If you go back and see how many times weak triggers don't push a market, or how many times fibs make a bounce, right? Or divergence lows, or weak triggers, you actually start saying to yourself, oh crap, I'm losing my advantage. Let me get paid. I'll wait for the next one. That was my trade this morning right here. See how it's in the middle of nowhere? It's like I've got so much room to run. And Jonathan, that was an $880 trade. That one little snippet. And I didn't care that it went all the way to the fib. Didn't matter to me. Because in that 12 seconds, I made $880. It was only supposed to be $440, but I had jittery fingers. But the right trade is the right trade. It's all about getting paid. What do you guys want to talk about? Yeah, that was 4 contracts. Mark, I want to go short into support. Guys, it's the gap theory again. If price reaches an area and the large triggers are a full bar away, it's likely to close that gap. Yeah, it was totally caffeine fingers, Jonathan. I clicked it and then I've got carpal tunnel too, and some days my hands work better than others. It rapid fired. Boom, boom. I was like, uh-oh, hope this one wins. And it did. Ron, you don't mind missing out, but you hate to lose? I don't mind losing. As long as I take the right trade. It's weird that I've gotten to that point. I don't mind losing. It doesn't faze me to lose. It doesn't scare me to lose. Man, Belt, which chart? 10 minutes ago. Oh my gosh, I've thought since then. Hold on, let's see if we can find it, because I want you to get an answer. The chart I use for teaching areas. This one? It seems like guesswork? Okay, so let's address that. All right, so let's do this first. That's okay. When the large chart rules are met for a high probability trend trade, I will have momentum and a clear path. So I go to my small chart and look for an entry. Are you with me on that? So large chart rules met. Cool. So rule number 3 says that I'm going to use a limit order to buy a pullback at an area inside a favorable large trigger. So that's the best of the best for the new user. So we're going to walk through each step of that. But here's the deal. There's two very, very important words here. The first one, actually they're right together. Area inside. So let me expand. Areas can be fibs, mid bands, yellow 1-to-1s. So are you with me so far? That's just rule number 3 if you write it out. Areas inside of mid bands. So the reversal bar starts the pullback. I'm going to annotate all of this. So the reversal bar signals the start of the pullback. This lets me know that the market may pull back. It may not. I don't know. But as long as I get the reversal bar, this is the first one. My second order of operations, and we'll number them all. And let me put this over here. My second order of operations, and I'm going to use the shape here, is identify the favorable large trigger. So I'm going to put a number 2. This is where price is most likely to return, but not necessarily a bounce point. Does that make sense? So I'm going to identify my triggers, and that's this black box. This is where I think price is most likely to return. It returns to large triggers. So I'm going to refine this, and this is the third part. Let me use a shape. And it's already a yellow box, so we'll keep it a yellow box. And I'm going to draw this one, and this is the third thing. No, not inside of, yeah, large and synthetic, sorry, yes. So number 3 is I look for those areas inside of favorable large triggers. The point where the market is most likely to bounce is from one of these areas. I don't know which. So I go first from this giant black box. Here's my triggers, right? And the tighter they are on top of each other, the smaller this box will be. And then I have to draw a box around the areas inside, fibs, midbands, yellow 1-to-1s. And you'll notice here that I do have fib, right? And then I do have another fib. And this is where I expect the market to bounce. So let me change arrow color real quick. I expect it to come back and reach the triggers, but I also expect it to use one of the areas inside to create the bounce. So this is why, Belt, I'm so adamant about the word area inside of favorable large triggers. And let me see if I have a picture of it, and I may not. And let me see. Let me go to entries real quick. Bum, 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 bum. And of course, I think we did this the other day too. So this one is just a midband, right? It's the only area inside. But the one thing that I didn't put on that picture because I was running out of room, Belt, is that my limit order will go below the lowest point of resistance, or it'll go above the highest point of support inside of those triggers. And the reason that I do that, the reason that I'm in at the highest point is because of the momentum on the large chart, because I just don't expect these guys to be able to push that deep. So here it hits the midband, but it also hits fibs, and it goes to the second fib. And the thing is if I took the midband off of the chart, I'd still have a trade. Here the midband's on the wrong side of the 1-to-1s, and it kind of goes through both of them. And then the areas beyond those triggers aren't a part of the trade. There's that window that I used to teach from the lowest point to the highest point, but my order always goes closest to the pullback because the large chart should have the best looking momentum on it. And then sure enough, this is one of the ones that fails. There's not. There's only 3. There's only 3. There's not a lot of points there. It's fibs, midbands, yellow 1-to-1s, and none of them are more important than the other. Absolutely none of them are more important than the other. What's important is that they're inside triggers. So let's go see, just for grins. And I think somebody got paid on this trade earlier. I think Jonathan did. The midband was inside of the triggers. Do you see it? But the fib was the lowest point. Not my preferred area. I don't have a preference. My rules say closest to the reversal bar, the lowest point of resistance or the highest point of support. So let's do this just for grins. We'll just go like this. Everything says down, right? You're going to get run over, Belt. You will get run over. You'll get the ever-loving shit kicked out of you every now and then. But with the pattern, with the rules met, if you go back and you take that trade 100 times, you're going to lose 20 or 30 of them. And it's not getting run over that should scare you. It's breaking the rules and not having the advantages that should terrify you. So do you see how the large chart says down? Large chart has momentum. Nothing in the way. We're all good, right? Small chart's doing the same thing. Small chart's absolutely cranking down. And there's a reversal bar, and this is a super quick one. But I want you to see this. At the time of the reversal bar, I should probably find a better example. From the bottom line of the triggers to the top line of the triggers, this is where price has the potential to return to the trigger lines. Does that make sense, everybody? We're just walking through it. We'll do this a couple times. I think this is a great tool. And then the rules say, Belt, from the lowest point of resistance to the highest point of resistance is where the market is most likely to bounce from one of these areas. So I want you to look at the large chart and really embrace the idea of momentum. There's two ways to do this. I don't know where the market's trading right now. Here we go. I could put it below the mid band and hope that the small crowd can fight all of that momentum and clear path, or I can go closest to the reversal bar and put my stop outside of the triggers. And so here I'm in a trade. And the mid band never got hit. And this is why we talk areas rather than mid bands. And I know that Jim said mid bands, right? And I know that he loves that idea of a mid band. And I think that it is detrimental to your success to put all your stock on a mid band. Where's this circle at? See the split triggers? Have no idea where it's going to be. And this one, it happens to be a mid band. It also pulled up almost to the synthetics. That one happened to be a mid band. This one happened to be mid band and 1-to-1. So you never know what it's going to be. You don't know if it's going to be a mid band. You don't know if it's going to be a fib. Right? Blew right through the mid band and came down to the fib. So that's kind of the thinking on it, is we're just using them. It's like a wall, like we're kicking a ball. I don't believe that. I don't believe that at all, Belt. I think that you're going to miss too many trades by holding out for a mid band, and I think that when you miss trade, then Jim can teach the class. You can go ask Jim to teach you. And I've already spoken to him about this, guys. We spent 27 years teaching people. We spent 27 years. So what he does, Belt, when he tells you a mid band, is he gives you one thing to focus on. And that's good. That's smart. Because people get overwhelmed, right? Oh my gosh, I have to look for 3 lines. And think about it, guys. If you're walking down the street and someone says, hey, look for 3 things, you're okay with it. But when you're learning something new, it can be a little overwhelming. But Belt, I promise you, this is why I say language is important. This is why I firmly believe that the language that you write on your charts, that the language that you use to describe your advantages, that the language that you use to describe your entries every time you annotate a chart pays dividends. And you guys think I'm a huge pain in the ass asking you to annotate your charts. But you're creating an awareness and you're creating a correlation between success. And no, you're great. Don't ever be afraid to ask. But have you seen this? Have you been in my first hour of class, Belt? I always see you in the second and third hours. Every day, areas inside of triggers, areas inside of triggers. And I'm very, very specific with that language because I think it's that language that keeps you from missing out. And I think it's that language, that understanding, that keeps you focused, using the word inside, using the word areas. And everybody learns different, right? So if you need it more simple, that's cool. You can do a mid-band. But a mid-band is a moving average. What does John call it? It's a 55 EMA, exponential moving average, I think. I don't know what that means. I'm not going to lie to you. Right on. But you missed that key concept. Your fibs, dude, these are the calculations that create fibs. Thousands and thousands upon calculations create those blue and red lines. So if there were a bar fight belt and you had the one little moving average dude and you had the guy that was an accumulation of thousands, wouldn't you put your money on the line and not the wiggle, right? These things are solid. These are based on the psychology and the past movement of the market. The mid band doesn't know any better. It just has to follow price around like a puppy dog. That's all it does. But when they line up together, it's magical, right? When you get a couple fibs and a mid band and one-to-ones, holy smokes, everything's in the same spot, and it's pretty amazing. So good stuff, man. I keep asking the questions. Always ask the questions. What I find, and I'm the same way too, is I have to hear the same thing, usually 10 different ways, and then my brain works it into something that works, and it's a mashup of all of them. And I know I'm not the only person that does that. All right, Kurt, losing momentum but clear path. Is that black line, that's man-made, right? Cool. What about those yellow one-to-ones? Are we not counting those? So we have a 50-50. Perfect. So this is, I'm going to go back to language again. No, you're okay. Losing momentum, but clear path, but 50-50, right? It can't ever be both. It's either one or the other. And this is just a great way to practice, right? And it's not your bad at all. It's all learning process. Don't ever bother writing clear path if it's a 50-50. Don't believe that it's a clear path. Don't tell yourself it's a clear path. Don't try to convince yourself it's a clear path. Let it be a 50-50. These are cool. I love 50-50s. And then one divergence says, man, that's bad. Two divergences says, oh gosh, on a 50-50, this is kind of crazy. Three divergences, absolutely, that's a termination condition. But because it's a 50-50, Kurt, if you're following the KISS plan, that first divergence disqualified your entry. Does that make sense? Perfect. But good recognition on the multiple divergences. And it might still go down, but you know that your advantage is gone. And then Abe, agree with you that inside the triggers entry, that was your big aha moment from the class. I love that. I love the aha moments. And of course it dropped like a rock. But sometimes it's just not your money, right? Sometimes it's just not your money. That's the hardest part about trading. Is when you say, and let's go to it, right? Man, I think it's going to go down, and your rules aren't met, and it goes down anyway, and you're like, son of a gun. I don't know where that trade was. This was it right here, right? Directly into a termination. Multiple areas, and that's tough. Really not a good entry in there. And then check that out. It's almost the same look, and it's only two divergences, and it rockets up. So, you know, it's not about what it does the one time, guys. It's always about what it does more often than it doesn't. Had a nice chance to break down, entered, managed, out for a few dollars. You took a shot, Jonathan, let it clear the fib. And this lets me know that you don't really have exit rules. Because a momentum style trade with a divergence against it is no longer momentum. And then it pulls back to the mid-band and resistance inside of the triggers, so maybe another one. Yeah, I like that you got out, that you didn't hope. That was a tough one. Just danced right at the fibs, right? Triggers not through, termination, wait, and look at this. Even the divergences are like, this sucks, Jen. One of the questions that I get from new people more often than not is, hey, Mark, where was my entry? Right? Mark, where was my entry long because I saw the market go up? Mark, where was my entry short because I saw the market go down? And they're always just floored when I tell them that there wasn't one, that wasn't your money. Not today, it's not. And it might be one day, right? It might be one day. But Jen, another one of those brilliant pictures. Hey, my rules aren't met, and it kept you out of a loser. Close to dog walking time. Yeah. It was nice this morning. And yesterday was the same way, guys. Yesterday during class was absolute garbage. It was the hardest class ever to teach yesterday. But I think I made, I don't know, $2,000. 2,500 after class within the first hour of class being done. To the point that I was like, I'm just going to go to the gym because it was giving it away. And sometimes that's how it works. And sometimes your schedule doesn't fit, right? And you miss the good stuff. I do it every day, guys. I don't get to trade during the best parts of the day, which means that I have to adhere to my rules even more. But man, there's another termination for the win, right? There's a termination with an untradeable bounce. There's a termination with an untradeable bounce. And if you don't think there's a fight in the market right now, guys, there is definitely a fight in the market. And there was a fight all the way down. And look what the high was. It was weak triggers right at a divergence high. That's what started the move down. And then it was 3 divergences in the same price range, and that's what started the push back up. And now they're just fighting. Is it going to go up or down? I don't know. Have no idea. Have no idea. So I just wait for my rules to be met. And it's easy for me to sit here and say that, guys. I've broken every rule 1,000 times. I've blown out tons of accounts. I've lost a lot of money. But I've learned a lot of lessons. And one of the things that I try to do is give you guys everything that I've learned so that you don't have to go through the heartbreak that I did. But the reality is you kind of do. Jen, it's so nice to see you back in here. Nice to see you back in here. We'll see you tomorrow. Hopefully the market plays nice for you tomorrow. Let's look at this one. 6 signs you know you're maturing as a trader. I love this one. I haven't shown this forever. The first one is you manage risk and then you manage reward. And guys, this really lines up with everything that I do in the morning by teaching entries before we talk about management. You manage your risk using this software by insisting on having those advantages. You manage your risk by having momentum. And you manage your risk by not trading into those key areas that we know can stop the market. And you manage your risk by waiting for that pullback to areas inside of favorable large triggers and knowing exactly where your stop goes, guys. And you manage risk long before you ever enter a trade with this software. And then once you're in, then it's time to manage the reward. And the fact that this is how we teach it, if you Google maturing as a trader, this was the #1 thing. That's where I got all these. Number 2 takes a while. That you're completely relaxed when making a trade. Have you ever taken a trade where you know in the back of your head, whether you admit it or not, you're breaking a rule? And you feel nervous and you're like, oh man, and your stops start moving and maybe you scale your chart 1,000 times and do all these different things. And then the opposite is when you have odds favorable momentum, when that path is clear, you just don't care. You're so laid back. You might even get up and go to the bathroom. Guys, the way you feel going into trades is a direct reflection of your trust of the rules. Not forcing or chasing trades, not fabricating, not using words like not a clear path, but it isn't really momentum, but I think, right? And if you miss it, it's gone. It's not yours. It's not your money. And that's a byproduct of having the confidence to know that you can find the next trade. 4 is a big one. Don't let trading be your adrenaline fix or your entertainment. Guys, this is a job. And this is a job that more people fail at than do well with. Take it seriously. And that's why I always discourage you guys from being yahoos on simulator. And then follow your trading plan. And Jen, she's not here to hear me sing her praises anymore. But when she takes pictures of her rules not met and chooses not to take a trade, that's her following her trading plan and reminding her that that's important. And I met a Nexgen client. He's in the other room every now and then. Brilliant trader. But he told me that he spun his wheels for about 3 years until he finally actually wrote out a plan. And once he wrote out a plan and then figured out how to stick to his plan, guys, he's been gangbusters ever since. And he told me that. He goes, if you don't have a plan, you'll never make it. And guys, I give you a plan every day. So follow it, right? Yeah, do not confuse a job with life. Amen. And then guys, this is a big one because I'm touchy-feely. I'm kind of a hippie. Your worth as a trader and your worth as a person are two separate things. So if you're struggling with trading, it's not because you're a bad person or you're stupid. It's because you're learning patterns and it's new. And if you lose a trade, you're not a bad person, right? You go kick a dog, you're a bad person. We'll have words. But losing a trade, guys, it's just an opportunity. So I like this one. Things that you're maturing. And to Ron's point, guys, if you do this well, there's more life to live. If you do this well, there's more golf outings. There's more beach trips. There's more long vacations. There's more nice things if you do this well. So learn how to do it well. Learn how to get in, get out, and go live life. I firmly subscribe to that one, Ron. I've never believed that the people that work the most are the hardest workers. I think they're typically the silliest workers. And when I was in the restaurant industry, you know, everybody's heard restaurant managers work 80 hours a week. They do it because they're all just stupid, because they have no time management and no plan. I was the GM of a restaurant, and I rarely worked over 45, 50 hours a week. Gotta have a plan, guys. There's more to life than work, without a doubt. So, I guess that's it for the day. Are we done? I'm just flapping gums here. I'd love to stick around and talk about something. Maybe termination conditions. Why you shouldn't go short into those divergence lows. Man, amen, Ron. Nose to the grindstone is not near as good as working with your head up and seeing where you're going. My gift when I was in a more corporate world was systems and routines. Creating systems and routines for people so that they could have easier work days and a better quality of life. And this is kind of the same thing, guys. It's all system and routines. And once you have your plan, stick with it. And you're good. So we all good, John 20, and Agasco 0410, Tracy, Dunk, Danford, Izzy, Ron, Jen, Muser, Vittorio, Tyman. How we feeling today? Morgan, Ryan, Pete, Joe, Christy, Gary, Kurt, Rob, Clara, Cheetah, Tom, Gino, Tyree. Good to see you in here, Tyree. Kenny, Hammond, Renegade, like that hat. Remember, guys, all you have to do is ask. All you have to do is ask. Kind of bear day? Ollie, you still worry about those pink 1-to-1s? Then make them a part of your plan. Check this out, Ollie. That was a 50-50, just barely, right? And that was weak triggers. And man, use them if you like them. But I didn't need them to not be in a trade there from the very basic rules. And let me just see, just real quick. In mine, it was even more of a termination condition, right? None of my triggers got through. And that's a fib. And that was the termination. So, I mean, if you need them, Ollie, use them. If they feel good about them, use them. If you're nervous that they have an impact, use them. It's okay. They're part of the indicator package. I don't tell anyone not to use them. I tell you that I don't use them. But I also don't use a range chart, right? And some of you find great success with a range chart. And I don't use a 21. And some of you find great success with a 21. So you just find what works for you. But I think the rules negated the need for them. But if they make you feel better, one extra level, man, use them. For sure use them. I'll never tell you not to use them. Two eyes, two charts. Hell, one of my eyes is lazy. I got like 1.5 eyes in 2 charts. It seems to work. Seems to give me all I need. The range chart doesn't give you entries. Rules give you entries, Jonathan. And there are rules that require the range chart. Language is important. There are rules that are dependent on the range chart. So are there more trades if you add one? Absolutely. If you don't know the rules, it's just another reason to take the wrong trade. So when you guys start adding stuff, make sure that you know why you're doing it and why you're using it and how to use it. I hope that made sense without sounding too soapboxy. You will one day. And Jonathan, I think what you may do is what some of the other people do. Is you may say, you know what? I can make $1,000 a day without a range chart. Do I need to add it? Some people just want to be busy. Some people want to know everything. I just want to make money. I just want to get paid. I want the path of least resistance between me and the paycheck that I want. That's it. I want as few moving parts as possible. That tends to work for me. But I'm not everybody. Some of you are engineers, and some of you are pilots, and some of you are doctors, and some of you are lawyers. And some of you, I don't know, you're like me. You're daydreamer, artsy-fartsy guys that draw on people for fun. So everybody's different, and everybody has a different plan. Nobody's wrong. It's just different. That's what makes America great. The world great. It's the diversity. Nah. There's a lot of good lawyers out there. Why not just the bad people? Well, Jonathan, you have to remember, and that's very perceptive. John Novak's job is to find as many ways to make money as possible. Oh, really? Right on, Pete. Because everybody's different, right? So if all you sell, you guys may have seen this. Have you guys seen, I'm going to give you the link. Has everybody seen Joe Dirt in the fireworks scene? And he's like, well, I just do snakes and sparklers because that's all that I like. And Joe Dirt's like, well, it's not about you. It's about the consumer, right? And so Jonathan, John Novak's job is to find every way possible to squeeze every ounce out of this software so that he can appeal to everybody, because his livelihood depends on software sales. So he's always looking. And it's funny because one of the things in the glossary of common terms